Hello, fellow traders. This is TheRumpledOne coming to you on Tuesday, September the 3rd. Let's talk trading. Weekly open and gap. Yes, I know. Yesterday was Monday and the market was open, but it was Labor Day, and so there really wasn't much happening, so that's why I waited till today. Just so you know, these videos are for educational purposes only. Your results may differ from mine. And as we start the month of September off, I'm going to remind you about risk management. Never lose more than you're willing to lose on any one single trade. And I'll just go through some of the pages here, the brain management. Just so you know, there's a lot of things that we fear or we regret, and it causes us pain, but it's not the market that's causing the pain. It's your reaction to the market. And money management, you know, I see so many traders who had the opportunity to take a few pips, but because they wanted more, they wind up giving it back. And the thing is, if you can just take a little, on a regular recurring basis, you can build your account. But if you're looking for those home runs, those mega trades, those 100 pip trades, unless you're swing trading for weeks, it's usually not a good idea. And one other thing, you just have to understand that every win is luck, because you do not control the outcome. You put a trade on, it either goes your way or it doesn't. You can't make it go your way, so if it does, you were lucky. Doesn't matter how much research you do or what method you use. It's just that since you don't control the outcome, if you have a chance to take profit, you got lucky. And I know that's a hard pill to swallow. It really, really is. But sooner or later, you will come to that conclusion. Now, that doesn't mean there's no skill involved. But even if you are the world's best trader, or one of the best, every win is still luck. Okay, so let's just take a quick look here at the month. We have a new month, and right now we're just 8 pips above that monthly open, 20 off the high, 26 off the low, and we are sitting in the upper wick zone of the previous month's candle here on the pound dollar. All the gaps have filled, and the pound dollar had gapped down, and you can see here we're below the pivot point and the previous week's midpoint on the weekly. We put in the opening range yesterday, and that range was an inside bar. So we can see we've already broken out of the low of that opening range, but we're back inside the previous day's candle body between the open and the close of that candle. And right now we are below the daily open by almost by 6 pips. And for the year, we are 423 pips above the yearly open, 131 off the high, and 836 pips off the low. As I mentioned earlier, yesterday was an inside bar. You can see we've got a lot of inside bar action on the daily, and we've got some decent action on the weekly and the monthly. Now, this is very interesting. If you look at the charts, you can see that the yen pairs are moving. And you can see that the it's like we've got a couple of euro pairs that are moving. A lot of range out there if you're in some of these other pairs. And my old favorite, the dollar yen, 126 pips below the daily open. I mean, there's now, and I just told you about don't look for those 100 pip moves. Well, sometimes you can get them if you're in the right place at the right time, but it doesn't happen every day, at least not in the market as it has been this year. Things have been muted, especially on the pound, but you can see here the yen definitely was moving. I'm not sure why, haven't looked at any news, but something must have happened somewhere because the yen is just, these pairs are just moving. Maybe another intervention. Pound yen 229. Now, the thing of it is, you might be tempted to switch and then trade a different pair. But the thing is, you've noticed, been doing the pound dollar for years now, ever since Walmart and I started trading, because it didn't matter to me which pair. You know, because at the time the pound was moving, and so it's like, sure, I can trade that pair, doesn't matter to me, but I stick with it. Because when you stick with something, you get to know it. You get to see things that you don't see the first day. After you've done it for a year or two, all of a sudden you wake up one day, you look at the chart, and you see something. It's like, wow, why didn't I see that before? Well, because you didn't have enough screen time in. And you just start to recognize certain things. And as you can see here, we're just touched the daily open and got rejected. So we never quite hit the actual buy zone, but we've crisscrossed the daily open earlier in the Asian session. And you can see here we've done some crisscrossing of the weekly open. And we're in what I refer to as no man's land, which is the area between the daily open and the weekly open, because one's saying long, the other's saying short. So it's like, what do you do? And sometimes, to paraphrase Cool Hand Luke, nothing is a pretty cool thing to do. Range is too low for the rats, only 40 pips. And as you can see, the old rat, the zones are right there with the smart rat. You can see we've got about a 5 pip difference here. And on this one, we've got almost a 10 pip difference. Yeah, we have 10 pip difference. On those trigger lines. Bambino Flex indicator said short, price near the pivot. According to the pivot trading plan is a long. It looks like there was a couple pips to be had trading that. Price near S1 is a long. So we actually went below S1, close to S2, which would also be a long trigger, and then prices turned back to get back towards that pivot, and it just crisscrossed there on the H4 candle. We've taken out the daily pivot, We haven't quite hit the weekly pivot, and we haven't hit the monthly pivot. So we will have to see. And the month of August finished up with 5 missed pivots. One, two, three, four, 5. In and out of the upper wick zone, and then in and out of the lower wick zone. Once again, inside bar yesterday. I'm looking at the smart range. We're at 46 pips for the week. We haven't broken out of the previous high, but we broke out of the previous low by 1 pip. And that is a break. Some people would say it's a fake out, breakout, or whatever, but if it does it by a point, it still broke out. It's that simple. And let's see here. Nothing else is really significant because there's not much movement. As you can see, price is now crossing back above the daily open. You can see the M30 candles. We're getting some 10 or better pips here. Including this hour, and in the previous 6 hours, we've got 5 out of 7 hours over 10 pips, or 10 pips or better. So there is some movement, so there is some money to be made, and we're moving back up. As you can see here, it's putting in a 3 ball. So let that 3 ball settle and see if price will come back the other way. And it's going to put in a new higher wick zone. You can see here, price broke out. Came across the previous day's midpoint. It's one of my old favorite trades. And once again, previous day's midpoint, just the horizontal line. And looking at the year-to-date range by month. Yeah, 46 pips for September so far. And let's take a look at what's the ATR for September. 353. So we'll have to wait and see if we get to that point. And let's check out the month. Once again, inside the upper wick zone, distance to the MA, 197 pips. Buyer strong control, above the previous mid, above the pivot. And we fade the pivot sell. And we've got a lower high, higher low. Inside bar. Quick look at the week. Price between the wick zones. 78 pips away from the EMA 5. Fade pivot buy. Lower high, lower low. So, fellow traders, we're out of time. So it's not what you trade, it's how you trade it. Go out there and drain the banks. This is the Rumpled One, over and